Saturday, October 21st, 2017, Monaco 64, home of alternative economics and contrarian views. So I'm going to be talking about the technical picture for gold, silver, the HUI index, and also the GDXJ, the longer term picture. Before that, I'd like to say that this is a sponsored video for El Oro Resources. El Oro is an exploration and mine development company, and they hold 100% undivided interest in the La Victoria property. And that property is located in the prolific north-central mineral belt of Peru. The ticker symbol is ELO on the Toronto Venture Exchange, TSXV. CEO and chairman of El Oro is Tom Larson. I've known Tom Larson for a few years. I met him in Switzerland. He's a good friend of my brother-in-law, and lately we've been in touch. I told him about my YouTube channel and we decided to do a sponsored video to publicize the company. Tom Larson has over 30 years experience in the investment industry. He specializes in corporate finance and management of junior mining companies, and has raised in excess of 150 million Canadian dollars to date. So what's special about El Oro right now? Well, in September, El Oro Resources received drilling permit for the La Victoria Gold and Silver Project drill in north central Peru. This property is wholly owned by El Oro's Peruvian subsidiary. It's never been explored or mined before. It was privately owned for like over 30 years. And communicating with Tom, this is what he told me by email the other day, and I quote him. He says, "We are in a world-class gold, silver, copper epithermal porphyry system with existing deposits within 50 to 100 kilometers in proximity that have deposits in the several million ounce category." Several million ounce category. That's interesting. Lagunas Norte, owned by Barrick, for example, as you can see there's a lot of other companies, mining companies, surrounding that property. And El Oro stock price is trading around 80 Canadian cents. It has been in the range this year, and it closed at 81 yesterday on the 20th, and the market cap 26.5 million Canadian dollars. So this is just an informational video to let you know about the opportunity. Gold mining exploration companies are risky, but the fact that there are other properties around there owned by the big companies that produce millions of ounces is quite interesting, especially for a company that's worth 26 million market cap at the moment. So El Oro Resources, ELO, TSXV exchange. So now let's look at the technical picture for gold, long-term picture here. I've got this monthly chart going back actually 30 years, but I was reading an article in King World News, I think it was yesterday or the day before, about how gold has been able to stay above the 50-month moving average for the last 3 months. So I thought, let's have a look at that. So I did the chart, I did the retracement as well, as you can see. First, the retracement. I've spoken about the golden mean before, and how a lot of times markets retrace to that 61.8% retracement. But with gold, though, we retraced 50% roughly. We did go down to 1045, which was the low in December 2015. 50% retracement is 1086, but fairly close. So it held there at the 50% retracement. And for the last few years, we've been basically consolidating between the 50% and the 38.2 retracement level. And now we're also starting to move definitively above that 50-month moving average, the red line there. And you can see during the bull market, first leg of the bull market, in my opinion, from the early 2000s to 2011, gold was always above that 50-month moving average. I guess it got ahead of itself when it made it stop just above 1920. And what we've seen the last few years is basically, the market get back below that 50-month moving average and now starting to move back above it. And interesting that the 38.2 retracement is right around where we closed yesterday at 1280. The retracement is 1282.93. So I think the picture is still looking good longer term. I know in the short term there's a lot of noise, but it looks like that low in 2015 at 1045 is the low for the next leg of the bull market, in my opinion. So for silver, I'm actually just going to look at, I'm not going to look at silver per se, but look at the gold-silver ratio. And this chart was sent to me by Brian, the Maestro, from the Maestro YouTube channel. He had like a live chat on his channel a few weeks ago, and he was talking about this ratio. And I said, oh, look, Brian, there's a head and shoulder formation. And he hadn't seen it. And then he drew the chart for me and sent it to me. So thanks, Brian, for the chart. Head and shoulder formation means it's quite a bearish formation. And in this case, that would mean that this ratio would go down. It would signify a higher silver price relative to gold. So, and usually when silver is outperforming gold, that is good, bullish for the whole precious metals, gold and silver, sector. The neckline is just around that 75 level. Yesterday we got below that level, but we ended up closing just above 75. So still testing the neckline. I think it looks quite negative, so the objective could be around 69 or lower. And just goes to show that I think silver is ready to to motor ahead relative to gold. Does that mean I'm bearish gold? No, that is just a relative trade. You sell, this is more for traders. I don't recommend this for investors per se, unless you've got almost no silver and you have a lot of gold, maybe buy a bit of silver. But as a trade, you need to do this. This is, probably through futures or maybe through the ETF. But I'm not sure how you can go short the silver ETF. But this is more to indicate that I think silver is going to outperform. So if you're light on the silver, maybe you should think about, relative to gold, you should think about maybe increasing your holdings of physical silver or whatever you trade. So HUI, Gold Bugs Index, major mining companies. Low in January 2016, just after the low in gold. Traded from like 100 or just below 100 to 286 in 2016. And ever since then, it corrected down to the 61.8 roughly, just a bit below it. And we're basically, this whole year, we've been consolidating between, 61.8 and 38.2. 50% retracement has really been the middle of the range. I guess now we're starting to stay above that 50%, so it's looking a little better. But with gold and silver looking fairly positive in my opinion, longer term picture, I'd rather be long the gold bugs index or some of their components than the NASDAQ 100 or the NASDAQ composite or the S&P or the Dow. I'd rather be long the gold bugs than those. So the key levels there, of course, are about 215 on the upside, 192 on the downside. That's the 50% retracement, and then around 170, 175 below that. So now let's have a look at the GDXJ. These are the junior mining companies. Same kind of scenario. Went from around 17 to 52 last year, then corrected down. Same 61.8 retracement there. Very interesting. You know, we went a bit below that level, but as I said in the video I did a few weeks ago about the golden mean and how markets sometimes, you know, a lot of times trade, you know, retrace to interesting levels. You know, that's pretty, you know, nature is not perfect. The seasons don't always start in the same exact date. You have unseasonal weather and, you know, cold weather in the summer and vice versa. So nature is not perfect, but it's pretty damn near perfect there. So right now, you know, we've been consolidating basically between 61.8 and 50%. So the HUI is a little bit more positive. It's stayed above the 50%, but the GDXJ needs to get back above the 50% retracement, which is 35. And again, I'd rather be long the GDXJ than the NASDAQ, the Dow, or the S&P, or the Russell 2000 for that matter. And relatively speaking, it looks like a GDXJ could outperform the HUI. It's more, I would say it's more leveraged because there's smaller mining companies. So that's it. If you enjoyed this video, please like, share, subscribe to my channel if you haven't yet. And you can follow me on Twitter and also on steemit.com. And I'll talk to you later. Take care. Bye.